Warren Harris joins in. He's CEO and MD of Tata Technologies. Warren, very good morning. Tamanna here. Always great to have you here with us on NDTV Profit. I'm going to start with your con call comments, and of course we'll go to your numbers and details there, including what's happening with service revenues, etc. But the outlook in terms of deal closure, what is the change that you're seeing there?
Well, let me start by saying that that we entered the beginning of the fiscal year with a great deal of confidence. You know, a lot of our customers had paused investment decisions last year, given the elections in the US and the runoff of EV incentives in Europe, and so there was a lot of latent demand that we were expecting to intersect with. The tariff announcements at the beginning of April, I think, interjected a certain amount of uncertainty, and many of those customers that were looking to deploy capital paused and have delayed some of those decisions. You know, on the earnings call yesterday, I celebrated that many of the decisions that we were expecting at the beginning of the quarter were converted at the end of the quarter, and that's really what informs the confidence that we have in Q2 and the second half of this fiscal year.
So what is the kind of deal sizes that we can expect to see? And if you're looking at the numbers you're expecting for the second half, any specifics that you can share with us there, Warren?
Well, we converted 6 large deals that were over $5 million, 2 in the above $10 million range, and 4 in the $5 to $10 million range, and they're across our 3 industry verticals: automotive, aerospace, and industrial heavy machinery. You know, despite the slowdown in automotive, we see demand continuing in aerospace. We saw a 13% sequential growth in our aerospace business in the first quarter. And the industrial heavy machinery, which includes the work that we do with commercial truck manufacturers. You know, we've been selected by one of the large global players as a strategic supplier, and that will provide a platform for growth in Europe, the United States, and Scandinavia over the next 3 to 5 years. And so it's these types of deals that really are giving us the confidence that the worst that we've been grappling with in terms of growth is behind us, and we can really look to some of the green shoots that are presenting themselves to build the momentum that clearly we want to see as a company.
Warren, is the likelihood of your commentary being a lot more constructive in quarter 3 and quarter 4 very high, based on what you heard from your customers thus far?
You know, I think not only are we confident about 3 and 4, we're also confident about the second quarter. You know, the deals that we've closed have informed an order book that is materially larger than the order book that we had at the end of the first quarter last year. So, you know, it's on that basis that we are guiding positively.
The other question is, Warren, I mean, when this whole jig around auto companies using ER&D for a long gestation period, because it's a very long cycle, right, to do, and therefore collaboration with companies like yours would be helpful. It was considered to be something that will last till the better part of the decade. Then this small disruption of a period of maybe some slowdown. Has it quickly turned around? We are used to V-shaped recoveries in the economy of late because of concerted global central banking action. Has there been a very sharp V-shaped recovery in the mobility segment for demand for your products as well?
I don't anticipate the type of V-shaped recovery that we've seen in the past, and that's in part because the uncertainty in and around trade negotiations between the US and its various trading partners have not really yet played out, and so there is an element of uncertainty that will continue to interject caution. But you're absolutely right that in our business, it's a product-led business. And certainly the automotive industry is typically, when it comes to new product, a 2.5 to 4 year cycle. And so if decisions are made to include organizations like ourselves at the front end of product investment decisions. That's typically a partnership that would extend for a period of 3 to 4 years. And so again, we're starting to see those decisions come through, and again, the green shoots of what we see as a recovery across the manufacturing sector and specifically in the automotive industry.
Now, obviously, we've spent a better part of this interview looking ahead, and you've talked about the last 6 deals. But having said that, let's talk a bit about Q1 as well, Warren, and the core services revenues that have declined. You've seen the overall revenues also come down. Do you think that most of the pain is now behind us? Can you just talk us through the Q1 numbers and how you saw the performance there?
Well, again, just to repeat, we entered the fiscal year with a great deal of confidence, given the conversations that we had in Q4 and some of the deals that we were teeing up. That the tariff uncertainty prompted many of our customers to pause, and that's really what's informed the shortfall against the targets that we set for ourselves. But one of the things that you'll see is that margins also fell, and the reason the margins fell is that we protected capacity to deliver the order book that we've been building. So, again, that's another data point that reinforces the confidence that we've got with regard to the rest of the year.
So that pain point in terms of tariff uncertainty still persists, isn't it? I mean, fundamentally, that hasn't necessarily changed. But are you seeing your largest clients change their viewpoint on it?
Well, I think that the progress that we've seen over the last 3 months, and the interjection of common sense as it pertains to the deal that the US did with the UK, has certainly, I think, started to interject a level of confidence within our customers that deals will be done that will be palatable to the economies that are involved, and I think it's that belief that common sense will prevail that's really starting to encourage our customers to make decisions and deploy capital.
Warren, just one question. You haven't given into pricing discounts thus far, but is that a possibility? And would you do that in order to gain order book in what you said, an uncertain environment?
Well, I mean, whenever there is pressure on growth, there is always pressure on pricing. Customers leverage the opportunity that they have to challenge us. I think so far we've been very successful at resisting that. And I think one of the things that's enabled us to do that is the differentiated proposition that we represent. We're still the first organization in India, the first engineering services organization in India that can lay claim to the development of a full vehicle. And I think it's that type of capabilities with the cost base that we represent that's allowed us to offset some of the pressure that is always part of the cycle that we're currently in.
Warren, as we wrap up this conversation, the buzz this morning in Mumbai, at least, is the Tesla driving in. Do you see this as a positive with the EV space heating up? There's going to be a Kia launch a little while later. We know VinFast is looking at India as well. How do you look at that?
Well, I think India will continue to be a very exciting market. We are partnered with many of the players here in India. And I think particularly in the context of frugal innovation, there's a lot of capability that will be capitalized here that will be exported to different parts of the world. So we're excited about what's happening within the overall market as the industry continues to pivot towards electric vehicles. But we're specifically very excited about the impact that's likely to be had here in India. And I think Tesla's commitment to the market is a testament to that.